You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Bupp has spent 14 years successfully making it happen. This is the Real Estate Investing for Cash Flow podcast. Now, here's Kevin Bupp.
Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast, where our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. Now, our guest for this week's show is real estate investment expert and serial entrepreneur, Victor Menasce. Victor has focused the past 9 years of his professional life on real estate investment. He got his start in Canada and moved quickly into the U.S. markets as the opportunities for great investments presented themselves. Now, prior to becoming a full-time real estate investor, Victor spent the first 25 years of his career in the high-tech industry. Some of his past roles include Vice President of Engineering at WaveSat, Chief Technical Officer at Applied Micro Circuits Corporation, Founder and Chief Operating Officer at Somerset Technologies, and as well as a litany of other senior-level roles at high-tech firms. Now, on the real estate side, Victor has been involved as a principal on a wide variety of projects, including ground-up RV community, numerous multifamily developments, residential developments, just a litany of different types of projects. And he really does love the development space as well. In fact, we're going to have a little bit of a discussion today about some of his development projects. And really, my goal in today's show, guys, is to pull back the curtains on Victor's, on his company, on his operation, to better learn the intricate details of his shift from an employee in the high-tech field to becoming a full-time real estate investor. In addition to that, we're going to talk about not just all the great things that have happened since making the shift to a full-time real estate investor. You know, everyone always talks about how much money you make in real estate, and there's lots of opportunity here. Don't get me wrong, but there's also lots of challenges along the way. And a lot of times, folks typically shove all those challenges and all the downsides of being a business for yourself or being a full-time investor. They kind of shove them underneath the rug because they're not as sexy to talk about. So we are going to talk about those things today, and we're going to dive deep into an actual case study with Victor of a point in time where a deal didn't go as planned, went a little sideways, and basically, you know, what that outcome looked like. And so I'm very excited to get onto this show with Victor here today. But first, before we do, I have a few housekeeping items I want to run through with you guys. First and foremost, I've mentioned this now in the last couple of weeks, you know, and it's something I need to mention each and every week, but I just want to let you know that we're always in acquisition mode here at Sunrise Capital Investors. As you know, we're in the mobile home park space. We buy nationwide. And I'm mentioning this because I know a lot of you folks out there, you might not be in the mobile home park space, but you're out there looking for deals. Whether it's shopping centers or multifamily properties or self-storage or whatever have you, you're out there looking for deals. You're pounding the pavement. And just by default, you'll probably run across opportunities that are in the mobile home park space that might not fit your criteria, but could fit ours. And so we love to pay big finder's fees. And, you know, if you're actually in our space and you find a deal that maybe you can't take down on your own, we've got capital as well. And we'd love to maybe consider a joint venture with you. So think of me if you run across a mobile home park opportunity. You can reach out to me via our website, which is kevinbupp.com. You can just go to the Contact Us page. Next up, a quick mention. We just opened up the second tranche in our mobile home park growth and income fund. So if you're an accredited investor and you're interested in partnering with us on our acquisitions, you can visit our secure investor portal by going to invest.sunrisecapitalinvestors.com. And there you can review our PPM and investment summary. And lastly, guys, if you happen to be in the Tampa Bay area, which is where we're based out of, we're just across the bay from the Tampa Bay International Airport, about 20 minutes away, and downtown Safety Harbor. So if you happen to be in the area and you've got some free time, I'd love to connect with you. Again, go to the Contact Us page or Contact Me page on kevinbupp.com. Reach out to me. Let me know when you're going to be in town, and let's see if we can coordinate our schedules to get together and grab a bite or grab a coffee while you're here. And so with that, guys, I'm real excited to get into the show here with our guest today, Victor Menasce. So Victor, how you doing today, my friend?
Great to be here.
Yeah, thanks for joining us here. And I know that you're a super busy guy, so I really appreciate you taking the time out of your schedule to jump on the show here and have a candid conversation with me. And I know that, as I mentioned there in the beginning, Victor, we're going to talk about a little bit of your background. We're going to talk about some of the things you're working on, but we're going to talk about the all too unsexy side of real estate, which is, you know, the challenges that are associated with being a full-time real estate investor or developer. And every deal has its own set of challenges. Some some bigger than others. And so I'm really excited to dive into that conversation with you. But before we go deep here, what I'd love to do is for the folks that aren't familiar with you, aren't familiar with your background, maybe take a few minutes and expand a little bit on that introduction I gave you and tell our listeners a little bit more about yourself.
Well, Kevin, you're right. My path into the world of real estate investing was not the typical career path, that's for sure. I started out my career as a microprocessor designer. I was designing processors primarily for use in communication systems. I headed up the hardware development in the carrier networks division at Nortel Networks. And for about a decade, about 52% of the phone calls in North America were routed by a chip that I designed. So that was kind of my claim to fame, if you will. And I continued through progressively senior roles in a variety of different companies, did a lot of embedded microprocessor development, managed a lot of embedded microprocessor development. At one point, acquired IBM's embedded microprocessor division and ran that business for several years, along with a couple of other partners of mine. And that was a tremendous growth for me personally and business-wise. It was in that phase of my career that I really got good at project management, got really good at resource management, and learned how to raise capital. Was involved in a total of 5 different corporate mergers and acquisitions, and one IPO. And through that process, really learned how to raise money. And that was a skill that when I decided to move into the world of real estate investing, turned out to be a pretty useful and pretty portable skill.
Okay. Very interesting. And I want to talk a little bit about this transition, that you made. And Victor, I do believe you have a family, you have a wife and children. I don't know, the ages or such and how old they were when this all took place. But, I'd like to talk about the transition from a, full-time employee working, it sounds like a pretty busy and hectic schedule, probably traveling a lot, to transitioning over to your own business. So, I mean, there's a perception of risk that a lot of people associate with going from a wage earner, W-2 high income wage earner, to a self-employed person that's starting their own business and their own endeavor. I remember the conversation with my wife when she, back when we started dating, she first met me. I'd been a business owner my entire life, but she found it very hard to grasp the idea of literally not working for someone else. And it took her just a little bit of time to get comfortable with that idea and that concept. And so I'm assuming you were probably married at the time when you made your transition. So maybe speak to us a little bit about that, how that conversation went, and ultimately how you got your family on board with you moving forward in the real estate field full time.
It was... Well, so let's go back to that time. At that point in time, I was VP of engineering of a company that was designing chips that are used mostly in mobile phones and PC data cards. And I was helping to build a cellular network in Japan with the number 4 carrier in Japan. So I was commuting back and forth to Tokyo every 2 weeks, which was pretty punishing on me physically, emotionally. And the engineering team, was a 2-hour drive from my house. So when I wasn't flying to Tokyo, I was driving 2 hours to work every day there and back. So it was just not the right thing for me. It wasn't the right thing for the family. And I really made the decision at that point, after a couple of years of this, really just to take a left turn in my career. So I resigned my role as VP of engineering, and I was making good money. I was probably making, before bonuses, close to $200,000 a year, and, with bonuses above that. And so I went from that literally to zero overnight. Now, the conversation with my wife was, well, we've got some good reserves here. And, we did the math. I showed her the spreadsheets of how this could all work out. And of course, as the reality is rarely what shows up on a spreadsheet. So I really went from earning a very, very high salary to zero, and really started just burning through savings. If I was to do it again, I would do it very, very differently. Knowing what I know now, I would have been better off to hire 2 or even 3 full-time employees, give up a portion of my salary to those people, and still have some, income coming in the door. I would have been more productive. I would have probably been more effective as a business leader. And instead, I did what a lot of the real estate trainers counsel you to do, which is to get down and dirty in the weeds and, start flipping houses, which is what I did. And that was a mistake. So I wasted a lot of time and probably wasted a lot of money, basically going back and entering that business from the bottom of the business as opposed to coming into that business from the top of the business.
Very interesting. And how long did you actually flip homes? How long were you in that business before you moved on to bigger and better things?
I would say probably 4 years by the time that all of that got cleared out. We did a bunch of projects in Florida and Arizona and various Chicago, various places, and even here in my home city of Ottawa, Canada. And it just wasn't the right thing. It wasn't the right thing. Yes, you can make a bit of money, but we even had situations where with cost overruns or in some cases a bit of mismanagement, deals that should have made $100,000 made zero. And that is a reality. Sometimes these projects don't go well. Sometimes it's because somebody steals from you, and that's a real risk that you have to acknowledge. And set yourself up so that you've got the systems and processes in place so that doesn't happen. But it can happen.
Yeah, well, let's talk about that. There's definitely a couple other things I want to cover here in today's show, but we're leading into it right now to the topic that I'd mentioned in the introduction, and that's talking about the unsexy side of this business. And it doesn't matter if you're flipping houses or syndicating apartment buildings or buying mobile home parks or developing shopping centers. It doesn't really matter, right? Pick your poison. From the outside looking in, especially now with social media, everyone's out there promoting, all the deals that they're doing. They're throwing out numbers of units, and everything looks all great and hunky dory, right? Everything, no one ever loses money. Everybody gets 20% cash on cash returns, and the world is getting rich. But we know that that's not always the case. We know that there's not one deal that I've ever done that's gone exactly as planned. And now, there's deals that have gone very smooth, but had very minor hiccups that really didn't cause any issues whatsoever, and we just blew right through them. And there's other deals that ultimately had major roadblocks and barriers that came crushing down or crashing down. That some we made it through, some we didn't. And so I want to talk about that side of the business with you, and maybe you can speak to a particular example or a scenario or a deal that didn't go as planned, that ultimately went sideways, and what you did to basically come out on the other end.
Well, maybe I'll give an example from a mobile home park / RV park that we just recently completed. This is a 200-unit park that we built specifically to address a need for workforce housing. And, we're investing very heavily in a market called Lake Charles, Louisiana. I'm a big believer in this fundamental law called supply and demand. So, unless I'm building something that's within a 10-minute drive of my house, I might as well go anywhere. And if I'm going to go anywhere, then might as well choose somewhere that's great, not just something that's good. And what we like about this particular community is that, for a town of 200,000 people, there's $118 billion of natural gas, petrochemical, and seaport expansions in this small town, of which about close to 50 billion has already been built, and there's still a ton more in the pipeline. And this town needs everything. They're growing. They're busting at the seams. They need retail. They need multifamily. They need workforce housing. They need office. They need senior housing. They need it all. And so, today we have 4 projects in this community. And the case study I'll give you here is a 199-unit workforce housing RV park. And the reason for this particular RV park is the legions of construction workers that come into town, they get a housing allowance. And that housing allowance is not enough to cover a hotel, and they don't know the length of their contract. Sometimes they're there for 2 months, sometimes they're there for 5 years, and they really don't know how long they're going to be there. Rather than stay in a man camp, which is not the most attractive place to live, many of them will choose to go buy an RV, put it on a payment plan, and use their housing allowance towards that. And at the end of their contract, they have an RV that they own outright. Plus, they probably put a few nickels in their pocket at the end of each month. So there's a tremendous demand for RV sites in this particular community because of the legions of construction workers. So we decided to build a brand new park. The person who put this deal together originally had vastly underestimated what it took to get it done, estimated the work to be originally about $1.8 million, and he'd made dozens and dozens of mistakes. When we took it over from him, he hadn't even executed the ground lease with the landowner properly. We had to redo the ground lease. Now, what we didn't know is the extent to which there was community opposition to the project, and in particular, opposition from most of the neighbors. The result of that was that when you build anything new, you generally need access to utilities, water, sewer, electric, internet, and so on. and road access. And all of our neighbors basically blocked our access to all of those things that we would have needed to finally build the end product. So, at the end of the day, we said, all right, so we can't get water. We're not going to get an entitlement or an easement for access to water. So what do? We looked at how the city gets their water supply and discovered that they get their water from an underground aquifer. So we said, okay, no problem. We'll drill 2 500-foot wells. So we, went out, spent a couple $100,000 and built a couple of 500-foot wells. Same thing with the sewer. We couldn't get access to the sewer, even though there was a manhole about 60 feet from our property line. We decided to build our own captive sewage treatment plant. Again, a couple of $100,000 that wasn't in the budget. And, we had to go build a captive sewage treatment plant. There was a power pole literally 10 feet from the property line. And the way that the utilities draw their easements, they always go to the end of the property line. So theoretically, the easement would have come right to our property line, but our neighbor argued that it didn't. And when we looked at what was in the county records, it was really just a pencil sketch and it was ambiguous. And the lawyer for the utility wasn't willing to get sued. So they basically said, well, sorry, we can't get you power. At which point we, called the local senator and managed to have a meeting with our neighbor and eventually convinced the neighbor that they weren't really harming us. They were going to be harming the utility. And eventually they ended up granting us the easement of that last 10 feet. And then the kicker was the road. You would think if there's a road coming up to your property that was built by the city would have put the road in the right place. And at one point, our neighbor they first barricaded the road and said, this road is on our land. You don't have the right to use it. And we said, what are you talking about? And we produced documentation showing the granting of the right of way to the city. And they produced a survey showing that the road was in the wrong place, that in fact encroached on their property. And after a couple of weeks of denial on our part, we eventually came to the conclusion that they were right. The road bed had been built in the wrong place, and it was 25 feet further away from our property than it should have been. So what do? Eventually we said, all right, we're going to redesign the road. We'll get rid of the drainage ditch and we'll move the road 25 feet so it's fully contained within the road allowance at, cost of an extra few $100,000. Again, months of negotiation, and we eventually convinced our neighbor, because that roadbed had been in place for, 10, 12 years, convinced our neighbor to grant an additional easement so that the road no longer encroached on their property. So step by step, one by one, we knocked each one of these down. And, I'm shortcutting what's actually quite a whole bunch more obstacles that we encountered, but you get the idea. We were simply not willing to fold on this. We were not willing to quit. We were not willing to admit defeat, even though there were many, many points in time where our neighbors could have stopped the project. And we had investors' money at play, and we take that very seriously, and we eventually persevered.
Hey guys, Kevin Bupp here with Sunrise Capital Investors. As you are hopefully already well aware if you've been a listener for any period of time, my goal has always been to provide you with as much value as I possibly can through my two podcasts, Real Estate Investing for Cash Flow and the Mobile Home Park Investing Podcast. As our audience continues to grow, literally, we've been downloaded millions of times by folks in over 125 countries. I've had thousands of people reach out looking to get involved in our niche. And that's the phenomenal niche of mobile home park investing. For those that don't know, I've been a full-time real estate investor for nearly 20 years now, and I've personally invested in and have owned apartment complexes, various commercial properties, hundreds of single-family rentals, and I've interviewed some of the most successful investors in just about every other asset class, and I've arrived at this one very simple conclusion. Mobile home parks are hands down the best investment I've found to date. Why? They provide investors with the best risk-adjusted returns out of any other real estate sector that I've seen. Investing in real estate can get complicated, and I really want to simplify this process for you. If you're someone who wants to diversify away from the uncertainty of Wall Street and allocate a percentage of your real estate portfolio to mobile home parks, but maybe don't have the time nor the inclination to personally locate good deals yourself, then our team will do it for you. At Sunrise Capital Investors, our team specializes in the acquisitions and management of undervalued and highly profitable mobile home parks. And we are now providing accredited investors with an opportunity to participate directly alongside our team in our up-and-coming deals. And let me say this, I believe that we are hands down the best in our space at sourcing highly profitable off-market deals. That's really what makes us unique in this niche and as investment managers. As stewards of your capital, we truly are aligned with our investors. We've structured our investment fund so that we as a company are incentivized in the same way the investor is, which is through the performance of the investment itself. In addition, we want to make sure that we not only make money for our investors, but that they understand how it's being made. That's why we provide our accredited partners with a private monthly podcast that walks them through the detailed updates on how their investment is performing. And we're very transparent, providing with the good, the bad, and the ugly at times. And so if you'd like to learn more about the partnership opportunities with our team here at Sunrise, please go visit sunrisecapitalinvestors.com and click on the investors link to get signed up. It's absolutely free and you'll get placed on the priority list of when new opportunities come along. Also, feel free to call us at 833-CASH-FLOW without the O. Again, that's 833-CASH-FLOW without the O. And one of our investor relations team members will help you schedule an appointment to speak with one of our managing principals. If you have questions, go ahead and schedule a call and let's get on the phone and talk. And with that, guys, I like to leave with one last thought. From the time that I wake up in the morning till the time that I lay my head down the rest of the evening, my number one priority with everything I do, whether it be recording this podcast, working for our investors, helping each of you reach your investment goals, to providing a great experience to each of our residents who reside in our communities, is to add huge amounts of value to everyone that I come in contact with. Now, with that being said, I look forward to the opportunity of bringing value to you through Sunrise and through this podcast. Thank you for your time. Now, let's go ahead and get back to the show.
Wow. Those are layers upon layers of challenges, Victor. I want to back up because there's multiple things that I want to dissect here. But first and foremost, the one general question I have is there a point in time, whether it be this project or any other, is there a point in time to where you do throw in the towel? I mean, do you kind of have that breaking point, or, based on the financial viability of the project? I mean, if you started out at a $1.8 million budget, I don't know where you ended up. I'm sure we'll get there. But ultimately, is there a point in time to where you throw in the towel? That it makes sense, I guess, to throw in the towel? Not that you choose to, but that it just makes more sense to throw it in versus continuing on.
Fortunately, I haven't encountered that, at least not in real estate. I encountered it once in the world of oil and gas, which is a whole other story. But so far, I have not encountered that in real estate. And one of the perspectives that I always take when it comes to real estate projects is to make sure that those projects have enough margin to be resilient. And what I mean by that is, I see a lot of investors going out, buying apartment buildings where, their margin is very thin. And by margin, I mean, by the time they complete all the improvements, the increase in valuation net of those additional improvements is sometimes only 10 or 15%. And that's way too thin for my taste. Mm-hmm. I want something that's, 30, 40, 50%. So that if, as is the case in the real world, things do go wrong, you've got some margin, you've got some buffer to survive those. Because you can have one mistake and now you're at break even, and you've got two mistakes and now you're underwater. I don't want that. This particular project, we've been open several weeks and we're achieving good occupancy. And the good news is we're cash flow positive anything above 23% occupancy. So when this park is full, it's going to be generating cash like you can't believe. And that's what I like about doing projects that have a lot of margin. In fact, with this particular project, we'll be able to return capital in about 3 years out of cash flow directly to our investors. And I like that. So if there's a bit of a cost overrun, we can handle that. We can go raise more money if we need to. And we had to in the end. At the end of the day, we said, all right, it wasn't 1.8, it was 2.4. Oh, wait a minute, it's not 2.4, it's 2.7. I think by the time we're done, we'll probably be 3.2, maybe 3.3 even. And there's really nothing intrinsically wrong with the project other than it ended up costing a bit more. But even at that total cost of that total investment, the project still makes a ton of sense.
Yeah, no, that's very interesting. So I want to dissect this, and I want to talk about the different layers of challenges that you encountered, and going back, if you could have a second run at this again from the beginning and take it all the way through, what would you have done differently? And so one of the things that caught my attention in the very beginning is you mentioned that I guess the original person that had taken this project on. So it sounds like you guys stepped in after someone had the idea. Someone at least took it to a certain point of development. It doesn't sound like too far along. And then you guys ultimately stepped in and took the project over. You mentioned, initial budget of $1.8 million. And then also that they had failed to do a good job of negotiating the ground lease. And so I want to hit on those two things very quickly. Was this a failed project from someone else that ultimately you guys came in and saved the day? Was that the scenario?
That's the scenario. This other person had actually gone through and got the project entitled. So they got the zoning, and that was a fairly lengthy process. But they didn't have the skill or the wherewithal to raise the capital, much less manage the project. And so, they needed a partner. And so we came in as a partner, and, they're still in the deal for a percentage of it in exchange for handing it over. So, because that, the alternative for him at that point would have been to lose it altogether and squander the work that he had done over those couple of years. So, at least he's going to get some financial benefit for his efforts. And, I'm very confident that he did not have the skills, the wherewithal, or the resources to overcome the types of issues that we had to deal with. Mm-hmm. So, he picked the right team in that respect, because we were not willing to quit, and we were not willing to lay down and admit defeat on this one.
Good. And then the ground lease. So how do you protect yourself from the risk with a ground lease? So you guys do not own the land. Just for those that are listening that don't know what a ground lease is. So basically they are leasing the land that this mobile home park or RV park is being built on or has been built on. And I'm assuming it's a long-term lease. Is that how you protect your downside, is having an incredibly long lease with that landowner?
Yeah, in this particular case, it is a 15-year ground lease and with some options to renew beyond that. So, given the lifespan of this demand for this particular product, specifically for workforce housing for RVs, we see about a 10 to 12-year horizon for that demand, at the end of which we put in the infrastructure to convert it to a mobile home park. We'll reduce the density. We'll have, basically cut the number of units in half, but then be able to convert it to mobile homes and get, albeit a lower revenue stream, still a healthy revenue stream for the end of life of that lease. Now, we may continue to choose to operate it beyond the initial 15-year term, but that's a decision for a future day.
Okay, got it. I want to talk about the community opposition that you guys received getting into this. Obviously, you probably assumed there'd be some, but maybe not as significant as what you encountered. What would you have done differently in order to maybe mitigate some of that community opposition? Or was there anything that you think would have changed that situation occurring?
When I honestly ask myself that question, and believe me, I've asked that question numerous times, for example, the road allowance, the only way I could have discovered that is if I had surveyed my neighbor's property. And who does that? Nobody, right?
Sure.
You produce your own survey. In fact, we even had survey issues on our property. There were 3, we hired our own surveyor, and the numbers that were produced from that survey didn't match 2 other surveys. In fact, by quite a wide margin. The property boundary was 75 feet away from where these other 2 surveys said it was. And it turns out, the most recent survey, the one we had commissioned, was correct. So we gained 75 feet that we didn't even know we had. But, you go through that due diligence process and, hopefully you've covered everything off. I don't know what else I would have done differently other than, one of the key reasons we were successful with the project, and I think there's a very powerful lesson in this for your listeners. We had folks on our team that were extremely well connected politically. If we needed an audience with the mayor, we could do that with one phone call. If we need an audience with the senator, we could achieve that with one phone call. And getting into the fabric of the community to get things done and overcome obstacles, break through bureaucracy, is extremely valuable. You don't underestimate that and the value of establishing those core level relationships. If we didn't have that, I doubt we would have been successful.
What advice would you give someone? You made a comment about investing in a variety of markets right outside of your hometown, right? So you guys have projects going on in multiple different states and locations, and I agree with you having those local connections and being sewn into the fabric of that local community. How advantageous that is, especially when you have a project that has, whether it's community opposition or any type of opposition whatsoever, incredibly powerful resources at hand make a huge difference. And so going into a completely different market where you might not have those relationships, do you have any advice for folks that, that you would give that, might help them gain, or I guess fast track some relationships going into a brand new market if they didn't have them already?
Real estate is a business like any other business. The dream of a passive income stream is really a little bit of a myth. At least if you're a principal, there's no such thing as a passive business. They're all active businesses in one form or another. And you can invest passively in an active business, but the key and the success for any active business is the team. I don't care what the business is, whether you're, starting a restaurant, a hotel, doesn't matter. Whatever it is, the team, a technology company, the team is the key. A lot of people tend to focus on the deal or the opportunity, and they often neglect the team. That's usually the number one mistake. And when things go wrong, most of the time, it's rarely an act of God. I mean, you might get struck by lightning, but usually not. It's usually because you had the wrong people in the wrong chairs. I mean, that's the reason why the original owner of this particular RV park project failed, is because he didn't have the right team.
Yeah.
Right?
Yep.
So, and that's the reason we were ultimately successful, is because we put that right team in place. The GC who we ultimately hired to do the project had built another RV park not 3 minutes drive away. And he had owned an RV park. His family had owned an RV park in the area for a long, long period of time. So we brought expertise in who had a deep level of knowledge on how to both build and manage these types of assets.
Got it. You spoke to the fact that you have investor capital in this deal. Obviously, there's absolute transparency in a project, any type of project, when you have investor capital involved. And I'd love to hear from your perspective, how you communicated on an ongoing basis with your investor base as these challenges presented themselves. Right? I mean, obviously, there's some tough conversations that had to be had there. It's bad news.
Surprisingly, they weren't really tough conversations.
Okay.
Yeah, they were not difficult conversations at all. What we do is we actually put out an investor update to our investors every month, pretty much like clockwork, and just give them very open and honest, transparent feedback what's going on in the project. And it wasn't always good news. Sometimes we experienced, while we were waiting to pave the road, we experienced over an 8-week period, a 6 weeks worth of weather delay. It rains in Louisiana, and it was too muddy to get heavy equipment out to actually complete the roadbed and pave the road. We literally lost 6 weeks because of weather. That's not a fun thing to communicate. But, I physically went on site, took videos, showed people on video. One month I did a video update, showed them the standing water on the road, and said, there's no way you're going to get heavy trucks on this. And our investors have been incredibly understanding. So that hasn't been an issue. It's really communicate openly and transparently and do it often.
Yeah, so there's no secret there. It's just open line of communication, absolute transparency, which I love. We actually do a very similar thing. We do a weekly, we call it a private podcast, but it's or not a weekly, but a monthly recording that basically gives insights to what's happened over that prior month, kind of projections for the coming month, any challenges we might be facing, any big wins or victories that we've had, and again, it's just that open line of communication that keeps everyone on the same page and doesn't let them create their own assumptions based on lack of communication on our part, right? And that way they've got the information at hand and it's readily available to them. So, Victor, I want to talk to you a little bit about I want to switch gears a little bit and talk a little bit about the market that we're in today. Every market's local, and so this is just a very general question, but it's really a two-pronged question. Number one, what excites you about where we're at in the current real estate cycle? And then on the flip side of that, part B of this is what keeps you awake at night? What scares you?
Yeah, two great questions. There's no question that from an overall macro market cycle, we're definitely in the fourth quarter. We're seeing a lot of data to suggest that there is a fairly significant slowdown. Part of that was driven by the increase in interest rates, but we're still seeing an awful lot of supply coming into the market. I think there's a lot of segments of the market that are overbuilt, and of course I'm generalizing here, but I can give you numerous examples of segments that have been overbuilt, and I'm sure your listeners can see them as well. That means that, number one, people are willing to pay too much for assets. I'm happy to sell in that environment. I'm not too happy to buy in that environment. So finding bargains is definitely challenging, number one. And number two, the opportunity that it creates, again, selectively, is when things are selling for too much in the open market, when finished products selling for too much in the open market, it creates the opportunity to create new product, to develop new product, provided there's demand and provided there isn't too much supply, to build new product at a discount compared to what things are selling for in the open market, which is probably the number one reason why we're focused on new construction quite as much as we are, is we can't buy an asset as cheap as we can build it. Mm-hmm. And so that's probably the number one reason. But it means being really selective and look for those market conditions where there's excess demand, a shortage of supply, and there's some kind of constraint on the supply. My favorite example is, if you wanted to get into the car sharing service like Uber, there's really no constraint preventing somebody from adding another vehicle to the road. And eventually what happens, it becomes a race to the bottom. You get to the point of tolerable pain where everybody is handling a certain level of pain, but nobody's really making any money because the supply has exceeded the demand at a certain point. And that can happen in real estate too. So you want to make sure that if there is strong demand, that there's some kind of constraint on the supply side.
Got it. No, that's great information. Victor, I'd like to enter on what we call the golden nugget segment of the show. And this is where we're going to wrap things up here for the day. And what I'd like to ask of you is if you had one final golden nugget of advice or wisdom that you could leave with our listeners today that may inspire and motivate them as they progress in their real estate investing career, what would that one last golden nugget be?
It would be that I'm going to put two ideas together here. The number one mistake I see a lot of investors make is that they are starting on projects that are too small. And one of the consequences of that is that you can't afford the skills that you need to properly fill out your team. So it's actually easier to go bigger. But then you might say, well, how do I find the right people? For example, we're building a project right now. It's a 240 unit new construction Class A apartment project. It's in an area with extremely high demand. And when I go in front of a lender, I've got a fair bit of development experience at this point, but when I go in front of a lender and they look at my track record, they say, well, Victor, you don't have enough track record building, $40 million projects. So I brought on a partner, a gentleman who's built probably 8,000 units of multifamily in his career, plus hotels and restaurants and office buildings and you name it. And so he's my partner. So when that question comes up, I push my partner Bob to the front of the line and they have that conversation with him. And, he and I are peers in the project and we communicate multiple times a day. And it's a really, really tight, almost effortless kind of communication because we put together the right team. So don't be afraid to bring someone into your team that is more capable, more experienced, who might be interested in collaborating with you on a project like this, because that's really one of the keys to success.
No, I agree with you. That's great advice, Victor. And I really appreciate you coming on the show today. This has been a lot of fun, very insightful. I appreciate you sharing, getting vulnerable and sharing your story there about the RV park in Louisiana. It's not often enough that people talk about the challenging sides of their business. And I think that's where we grow the most as business owners and as real estate investors, right? It's taking those challenges and those struggles and the roadblocks and extracting lessons from them and ultimately, growing our business or progressing our business to the next level by taking that lesson and applying it and making sure that hopefully we don't make that same mistake again. So I really appreciate you coming on the show today. It's been an absolute pleasure. And Victor, tell our folks how they can reach out to you if they have an interest in learning more about you and your company and what you guys have going on. What's the best website to find you at?
Well, love to connect with your listeners. They can reach out to me directly at victorjm.com. That's my website. I'm also the host of the daily 7 days a week Real Estate Espresso podcast. And that show is doing great. We're now at episode 405, I believe, and getting tons of great feedback from our listeners on that show. And this is a short form podcast, so not to take anything away from some of the bigger, more established shows like yours. This is your morning shot of what's new in the world of real estate investing. It's a 5-minute show, 7 days a week. So I'd love to connect with your listeners that way as well.
Yeah, no, and it's a great show, Victor. And as I'd mentioned before we jumped in this call, actually, I went on a ride this morning. A lot of my listeners know that I do a lot of road cycling and had about a 2-hour ride this morning. And I think I knocked out about 7 episodes all in a row. So lots of great, insightful information, lots of great guests that you've had in the show. And you guys definitely go check it out if you haven't already. And Victor, that's all we have, my friend. Look forward to staying in touch with you. And until then, just keep kicking butt out there. Okay. You take care.
And you. Thanks very much.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com. And we'll see you next Monday morning.